I was just kind of thinking about, as you were talking, when I think about fintech, it's obviously a pretty big space, right? It's kind of, I talk about prop tech because that's kind of an area that I have a lot of expertise in. And I think the first investment I ever did with QED was in Quinto Andar. We co-invested in that. And that's kind of the intersection of prop tech and fintech. But when I think of prop tech, I think of like, there's the for sale, there's the short-term rentals, there's the long-term rentals, there's mortgage finance, there's all these different aspects of prop tech. How do you, in your mind, kind of group the fintech kind of world? You've got the neobanks. You're putting you on the spot here with it. How do you, in your mind, do you just kind of break down the different elements of fintech kind of internally?
Yeah, I think that's a great question, and I think it's important to dig into what exactly is fintech. I think the way that we think about it is sort of you have the transactions that need to happen from a financial perspective. So I think historically, if you look at where have we seen more innovation in fintech in Latin America? There's lending is one big category. There's payments as another category, and then there's banking, which is essentially sort of holding, your being able to transact online and being able to sort of store your money at a either digital or physical bank. But those are sort of the three buckets, I would say. There's sort of lending, payments, and banking that we've seen sort of more players innovating. And I would say there's still a lot of room to do those transactions. But then fintech can also be considered as, business services, right? If you look at, for example, business lending, accounting, procurement, everything that a business needs to do from a financial perspective is one sector. There's insurance, which, can be considered fintech, and others may not consider it fintech, but there is sort of that financial services aspect to it. There's investing or sort of wealth management, and then there's what I sort of like to look at as well, which is the infrastructure or sort of the layers that enable a lot of these transactions to happen. And so when you look at just sort of starting with, what are the main transactions that need to happen, either completing a payment, doing financing, or sort of banking and storing your capital somewhere, there's all these other services that can also sort of support those transactions. And so I think a lot of it is just sort of evolutions or versions of how each of these take place, right? There can be very specific sort of peer-to-peer lending, there can be business banking, there can be sort of vertical banks for very specific segments. And so I think if you look at just those sort of three building blocks where it's, payments, lending, and banking, you can see sort of the evolution of a lot of these things, and just how they become interpreted in businesses is actually where it starts to become interesting, right? And to your point, sort of the prop tech pieces, we've invested a lot in prop tech as well at QED, sort of both in Latin America and I would say globally. We have a couple of investments as well in the US and in the UK in that theme. And I think it's sort of the interpretation of, right, how do you provide either financing for people to be able to, purchase a home, to move out of a home, whether you provide sort of mortgage lending. And so there's, I think, different evolutions of the types of financial services and transactions that can actually enable you to run your business. But it really comes down to, I think, those core things. And it's just a matter of how it evolves and how it's interpreted in different business models.
I agree. It's a big space, right? There's a lot of activity, and there's these big fat incumbents that have been around and haven't had the same motivation to innovate. And so that presents incredible opportunity. Now, as kind of, you mentioned also infrastructure, and we invested in Pomelo together, which was a LF2. And, I think that's a good segue into, they've got a great team. If I look at the last decade, there's been this explosion of valuations that have come from pretty high numbers. And do you think this is because the ecosystem is more mature, or is the ecosystem growing because bigger investors are looking at the region? What do you think the key elements, and where are we in that cycle from your point of view?
Yeah, I would say it's probably a combination of both. So I do think there's sort of a fundamental there's fundamental reasons for valuations increasing, and I think just in terms of we have, I think, better talent, better businesses, and all of that comes as a function of the ecosystem maturing, right? I think as people have sort of actually grown and scaled businesses, we have talent that is sort of coming back and sort of starting new businesses, and we see sort of the opportunity from a market size perspective that's definitely there. But I also think in terms of, more investors are looking at the region, and more global investors that historically sort of haven't looked at the region or haven't invested in Latin America are starting to see, both the success cases of, unicorns that are coming out of Latin America and sort of actual, noticing that there is a real opportunity. So investors are starting to notice that, but also, global investors oftentimes come with larger, I would say, pockets or bigger funds that maybe historically the region hasn't had. And I think all of that sort of is putting a lot of pressure on the valuations as well, because for a fund, and I can speak from it from QED's perspective, because we're a global fund as well, right? And you see sort of the different dynamics of various ecosystems. For somebody that historically has only invested in the US or in larger markets or more developed markets, that is now seeing this also sort of pressure on valuations and very sort of irrational prices, I would say, in the startup ecosystem. You take a look at, a less developed region that's also attractive, like Latin America, and you start to see where it becomes interesting to start investing in the region as well. And so I think as more of those investors, as more capital flows, I think the valuations definitely become, I would say, distorted. Probably, a function of that is a bit realistic in terms of just there is a real attractive opportunity there. But I do think we're starting to see, especially in the last year, more of this sort of inflation in valuations because of all of this, global capital starting to look at the ecosystem as well.